Hello. Welcome to the Strato AMA. My name is Jeff Powell from Strato, and this week's topic is tokenizing everything, a topic near and dear to my heart. This week, we are very happy and excited to be joined by our guest, Joe Lubin, CEO of Consensus and one of the co-founders of Ethereum. Hi, Joe.
Hey, Jeff. Hey, Kieran.
How are you?
Excellent.
And of course, as always, we are joined by my boss and yours, Mr. Kieran James Lubin. KJL, how are you?
You don't have a boss.
It's true. I basically just do whatever I want, really. Although really, I would describe it as trying to, on a weekly basis, trying to do what's asked of me without antagonizing too many people. And some weeks are better than others. Okay, so even though, of course, I love to talk about myself, let's get into it. Joe, I think that probably most people, if not everybody, tuning into this knows you as one of the most prominent and influential figures in the global cryptocurrency industry. Certainly how I think of you, and I know you a little bit, but I really don't know anything about kind of the backstory of how you got involved with Ethereum. How you heard about it, and what drew you to it, and how you got into it. So please feel free to share.
Sure. So always been a technologist. Spent my first few years out of college working in the space of artificial neural networks, machine vision, back when we were using similar techniques, and we had to manufacture our own simulated data. We had more naive architectures, but we were essentially doing shallow learning. There was an AI winter that followed that, and I ended up just being a software engineer after doing about 8 years in that space. Software engineer, spent some time in the world of finance, worked at Goldman for a little while, and ended up working in a situation where I with a partner was managing money for other people, and so I started paying attention to the bigger game, macro economics, finance, geopolitics, and just recognized that some things were really messy and complicated. There were these cycles, and there was more and more debt building up in the system, so I started to get concerned that with excessive debt in the system, we might move towards a sort of Japanification of the American economy and the world. So that was in and around the global financial crisis, and my concerns started to feel quite tangible. So that was a few years before I read Satoshi's white paper. So I read the white paper in early 2011. And I was pretty disillusioned to that point, because I thought we were in for a decade or two or three of really slow growth and sort of an unpleasant, unproductive global economy. But when I read Satoshi's paper, I recognized that this invention of decentralized trust was maybe one of the most profound inventions in human history. Satoshi invented decentralized trust and showed us how to operationalize it in the form of Bitcoin. And that was great because we're engineers, and we can just get busy re-architecting the whole system of the world on sounder foundations, decentralized trust. And it was too inchoate an ecosystem to want to start a company in early 2011. But I just stayed connected. You could read everything back in those days. So I became expert in the technology, and I was fortunate to meet Vitalik about a month after he wrote the Ethereum white paper. And that was a really crisp articulation of how just normal software engineers could build applications, decentralized applications on a decentralized protocol. And we could, as engineers, actually get busy building things much more quickly than one could imagine doing so in the Bitcoin technology. So since then, we've been inventing tokenization schemes, ECOs, DeFi, NFTs, all sorts of waves of innovation that effectively are essentially primitives in our toolkit now, so that we can start to construct a more decentralized world. So we've been kicking the tires on our own technology since the start, and I think we're about to see two massive waves of activity come into our ecosystem. One is agentic finance, or the human machine intelligence economy, and the other is traditional finance moving on DeFi. And so our company Consensus, in the form of MetaMask, is going to say some stuff about agents using our technology in a few days. And on the institutional side of our company, we're doing quite a bit of work with TradFi companies, FMIs and FIs that are building on Ethereum technology.
Cool, and thanks for that. And I want to come back to both of those points, but I want to flip to Kieran for a second. And Kieran, you uncharacteristically, for a lot of people in your position, don't actually like to talk about yourself. So I just want to give you also a little bit of an opportunity to talk about how you first got involved with Ethereum.
Yeah, well, it was an interesting time. I was in grad school in through 2014, really. So I was a math guy in undergrad, also a not so good football player, and well, yeah, I was a real team.
Best mathematician on the football team.
Best mathematician on the football team. Yeah.
Okay.
Right. And I sort of intended to make a career out of research. I spent a year after graduating working for a professor, and then went out to California to be in the math department at UC Berkeley. It's a great department, et cetera. And so I passed my qualifying exam roughly like April 2014. And I was looking for something to do for the summer. It's like an intense oral exam. You get a little bit of burnout from prepping for such a thing. I almost took a job in machine learning, but I was lucky enough to, through Joe, get my hands on the Ethereum white paper. And we weren't 100% sure what I would do at the outset. I remember writing a little bit of code in certain cases, trying to understand what the clients did. But also, so it ended up being valuable to Vitalik that I was pretty just plugged into what was going on in academia. And obviously he could reach out to anybody, but a lot of the center of crypto at that time, Stanford had a great group, that was right down the road. And we did a lot of organizing activity in the Bay Area where, Vitalik would sometimes stay at the Thiel Fellow House. And my co-founder, Jim, who's a particle physicist, a couple startups under his belt by background. He was living in Hayward. Of the three of us, he was the only one with a car. So sometimes he'd be sort of shuttling Vitalik from San Francisco to a meetup in Mountain View and back, and all that sort of thing. And we worked on some aspects of the protocol together in the very early stages, specifics on we contemplated at one time making the storage have an ongoing fee associated with it, because otherwise you get bloat, which you definitely get. Yes. And yes, never quite went in there, but there were some, cleanup opcodes and so on that went in later. So it was really like technical interest at first. So I read the Ethereum white paper first and kind of worked back to the Bitcoin white paper. I had a little bit of Bitcoin as of maybe 2010, 2011, but just not nearly enough. It's the lesson from that everyone says, right? How much Bitcoin you get? Not enough. But I didn't really get what it was until starting to work on Ethereum. And these were a great time. So I came back to New York for the summer 2014. Technically stayed in grad school a little bit longer, but really got in. Kind of helped some with recruiting. We ended up later co-founder, our CTO and I, and later our third co-founder, building one of the mainnet Ethereum clients in Haskell, which is still the basis of our product today. It was like a rabbit hole. We started digging, and never really found our way back, so to speak.
All right. Well, cool. I want to stick on the old days a little bit, but Joe, I just thinking about back in this time, Kieran mentioned 2014. When you're working with Vitalik and you're working on this new architecture concept where people can post assets without having to build their own blockchain. At that point in time, did you see it going to where it is? Did you see? For us at Strato, just thinking about this, multi-billion-dollar RWA industry, is that how you imagined it, or did you think of something different, or is there any surprises for you? The direction that it's gone since then.
So I had doubts early in the evolution of the Bitcoin ecosystem. I thought that it was such a radical idea. In the past, when people invented their own monetary systems, Liberty Reserve was a centralized, maybe Panama-based money system that didn't go well for those founders. I thought that the powers that be would recognize that Bitcoin was an existential challenge to how the system of the world operated, which was through top-down command and control, and do what they could to thwart it. One sec.
Oh, Joe's on the move.
Need to open a window. There's a puppy who needs to monitor the outside. There were a few times when Bitcoin shot up and then retraced, got hammered, and maybe by the third major time that it recovered and demonstrated that the technology was anti-fragile and the ecosystem was anti-fragile, I felt that at that point that it was going to survive. It would get too big, and because it was decentralized, it would be too hard to kill it. You'd have to shut down the internet. And so when I went into the Ethereum ecosystem, I was already really confident, especially bringing in new robust programming technology in the form of smart contracts, computationally complete virtual machine at every node of the system. I was already confident that it would survive, that Ethereum would be even more anti-fragile, and that over time we would build out sufficient infrastructure. And the next layer was essentially decentralized finance. And once we got that working decently, then we could have different use cases that would cross the chasm into mainstream culture, and sort of establish themselves, disintermediate existing business models, et cetera. And so we started to see that in DeFi, where we brought in crypto financial nerds to join the crypto nerds, and we brought in art nerds in the NFT ecosystem, and soon we're about to bring in machine intelligent nerds, or people who write agentic systems, and TradFi is obviously embracing the technology pretty massively right now. So I think we've built enough scalability and usability so that we're ready to welcome our TradFi friends and essentially onboard what's looking like hundreds of trillions of dollars of traditional securities to be tokenized on decentralized rails. It'll take a while for regulators to fully wrap their heads around that and to create constructs where that doesn't cause a lot of problems. But it is happening right now, and it's coming on pretty fast.
It is coming on pretty fast, and I do want to talk more about that. Just maybe last thing, just on the old days, Kieran, I'll flip it back to you for a second. So, at Strato, one of the things we talk a lot about sort of all of the time is community building, as our community is, growing, getting bigger, do you remember what that was like then? Like, the Ethereum community, like how that was growing out, what that looked like, how did that work?
It is, it was remarkable. My memories of the period are a little bit fragmented, but it was clear. Okay, so let's say November, I think 2013, Vitalik circulates the white paper. Pretty immediately, there's huge interest in it. Now, bearing in mind, I came in about 6 months later, 5-6 months later. It felt like meetups started to self-organize like almost immediately. Maybe by February, people were, there was an active kind of listserv, if you will. And, I think the Bitcoin talk actually kind of created, a culture where a lot of people would hang out on the internet, discuss interesting technical ideas. Obviously, Vitalik spent a lot of time there. But yeah, it was very fast. Mix of people interested, from just, kind of anon or semi-anon nerds to professors to all that sort of thing. And, it took, so also the idea of doing a sale came together. I wasn't in the backroom conversations about it, but I think by the time I had arrived, there was an intention to do the sale. And again, so that's around April. And the team, the kind of date kept shifting as work was getting done to make sure it was done cleanly and all that sort of thing. There was the 2 wooks, meaning 2 weeks was the meme, where the date kept getting pushed back. And we definitely saw a big uptick in interest right before and after the sale. We spent a bunch of time in a Times Square office that summer, 2014, with some other folks, and did a bunch of help decks. So the sale was 42 days, and with a good spread. The release schedule was such that you get the best price for the first, 14 days or something. And then it got a little bit worse, but still, if anyone put in during that period, for the subsequent 42 days. And so, so you did see big spikes of activity, right at the beginning, right when the schedule changed, and right at the end. And, through that summer, we would find people would come in, kind of request a meeting and say, oh, hey, I put a bunch in actually. So maybe we should talk. And a lot of these people ended up helping to build the ecosystem later. I think very novel distribution mechanism. There was an intentional decision not to, go try to raise VC. That happened, was hotly debated, but did occur. And so, but yeah, something it was the largest crowd sale in the world as of that moment. Many larger have happened, a lot of them on Ethereum since. Something 8,000 wallets, just all Bitcoin. So, pretty exciting way to do it. And I think it's responsible for a good chunk of the success. Obviously, the idea and the execution were super powerful. Some of it needed funds to make it happen, but it's just people were bought in early. And so it's a mix of organic and, well, I guess it was kind of like all organic, but giving a financial mechanism for folks to participate like really worked, I think.
Well, was that, I mean, so was that the idea, was that like that's how the ecosystem would grow, through the sale?
I think no, but like, so it's a token, like there's a token at the center of it, right? And you have to distribute it some way. Bitcoin did it all through mining. Like, I think the end state intended was that, the thing is the world computer, right? All financial and other transactions run through it on some level. But it needed, which from Bitcoin not being super programmable to Ethereum was that you could kind of do whatever you wanted from a coding perspective with it. But you then needed to meter how much of that activity occurred so you didn't crash everybody's computer on the planet, So Ether ended up being the native, energetic unit of account, let's say, for that process. So you had to give it to people one way or another. And like, so if you made them only mine it like Bitcoin did, like the funds kind of all go to the miners, right? Which is good and bad. But the miners are kind of mercenary. They have hard expenses. They've got to sell the token, at a bit of a profit and, all that sort of thing. Whereas I think by selling it to people, you got more app developers, more commercial people, et cetera, who are involved, and the distribution worked better for building out an ecosystem.
Yeah, so Bitcoin had a form of immaculate conception. Nakamoto, whoever they were, Hal, Len, and others, they invented the system. They started it up. They did some sending of Bitcoin on the system, and then they effectively disappeared, unfortunately for their families. Ethereum had a different form of immaculate conception where it needed to be not strictly a money or have strictly characteristics of money. It needed to be a platform for decentralized applications. And so it needed the token to pay for transactions and storage on the network. We intended it to be proof of stake right from the start. We thought that was a more correct way to do things. And we just knew that there were edge cases in the existing proof of stake systems that we didn't know how to solve for. We did know that we could make a better form of proof of work for quite a while. And using that better form of proof of work, you could sell the tokens to a self-selected group of crazy people who would join the self-selected group. So those token purchasers join the self-selected group of crazy builders. So there were like 100 or so people who self-selected to call themselves the Ethereum project and build the thing in the first year and a half. And through this token sale and through activity in the system, through proof of work and applications disseminating the tokens around the world, we figured we could fund the project and also disseminate the tokens fairly broadly. Turns out it took a little while to build a bulletproof, best-in-class proof of stake system. And so there was a huge period of time where those tokens got emitted and mixed all around and very widely distributed across the ecosystem. So good system, proof of work to distribute all the tokens, and then proof of stake to run a more secure, more decentralized consensus system with virtually no expenditure of electricity or 99.995% less than the early proof of work system.
Yeah. All right. Cool. Thanks for that. And not to sound too ham-handed, Kieran, but of course, talking about the Ethereum token sale makes me think about what's going on at Strato right now. So maybe you talk to us about the Strato Community ICO coming up.
Yes, without beating it to death. So tomorrow, pre-bidding will start on our token sale. So the Strato token will be paired with ETH, in part due to our spiritual origins. So we've partnered with the Uniswap to, they have a nice mechanism called a continuous clearing auction, the goal of which is to help get a token distributed and help get trading liquid on that. For folks watching, trading will not start right away. The tokens will be locked for a bit if you participate in the auction. And the really cool thing about it is, basically there have been many problems with token sales. So Ethereum being a great one, probably still the best of all time. And, there have been many subsequent token sales that have been good. But as they got popular, the mechanics became sort of more gameable. So sometimes people will auction tokens and have a fixed supply available starting at a certain point in time. And it was often the case that the entire supply would be sold in one block at like a high price, allowing like only whales with bots to get in, kind of thing. Whereas, again, a process like Ethereum ran, it sort of slowed everything down. There was sort of a max bid, at least per address and so on. So it ensured that at least some number of people could get in. The CCAIC is sort of the spiritual descendant of the Ethereum sale mechanic, in which, so it spreads things over an amount of time you choose, about a week in our case. There's a day of pre-bidding to kind of figure out how things are going. And so when you bid, you specify an amount you're willing to bid in ETH and a max price for the token. So and that bid fills between now and the end of the auction, right? So your incentive is to kind of go early and bid the max you think reasonable, because you actually get the price rises block by block. So you get the best execution by starting at the beginning if you're high conviction. What the token does, really, it's sort of our ETH, right? Like, so we went backwards in a sense where many crypto projects, you kind of, token first. Token is sort of the most important product in the system. I think that may still be the case for us as well. Vitalik is out there saying like, yes, ETH itself is an application and it is maybe the most important application on Ethereum. But so we built out all the mechanics. So our system allows you to tokenize assets like gold and silver, feed them into DeFi primitives, borrowing, swapping, et cetera. And we still have a need for that same computational metering that Ethereum has, so gas, basically. We've done this in our native stablecoin to date so far, but the way you really want to do it to scale the network is with a native staking token like ETH is, and that's what we call Strato, basically. So this will be the beginning of the distribution of Strato as we kind of put the final steps towards true decentralization within our system. You have to tackle these kind of thorny economic design and cryptographic design questions that we've kind of, I wouldn't say put off, but we've focused on the user experience side sort of first, and knocking out the final kind of decentralization scaling details starting basically now. So that's what Strato does. And yes, tomorrow for pre-bidding, and the auction will start to clear about 24 hours after that.
Okay, thanks for that, Kieran. And I do want to get to more about consensus and MetaMask and about the tokenization of everything, the main topic. But maybe just quickly, I'll flip it over to the both of you. Maybe just talk a little bit about sort of the history of block apps leading to Strato and consensus and how that all came into being.
Oh, which one first?
I mean.
Yeah. Okay. So block apps went through a process where we sort of formed as a separate team in the process of building the Haskell client. So I met up with our CTO Jim in the Bay Area. Again, like I started to meet with him maybe September 2014, something like that. And mostly he, with a little occasional help from me, started building out an implementation of Ethereum. There were many implementations of Ethereum, both now and at that time. And it kind of came in reaction to Bitcoin. Bitcoin had one definitional client, and it became a sort of, a bit of lock-in, a centralization point, if you will. You were sort of at the mercy of the core developers because there was one version of the software that was sort of official and defined consensus and so on. Ethereum went way in the other direction, having at times maybe 7 or 8 different, even early on, compatible versions of the protocol. And I'm not sure how many, there are now that are getting serious use, but there's probably about the same, right?
So it's about 5 and 5 at the execution layer, 5 at the consensus layer, but there are a bunch more that are less.
Right. So the that's kind of how we got into it. So we were one of the groups that built the Haskell client, and a few months in, so we're obviously Ethereum had it was pretty spontaneously organized, right? Like it took a bit after Ethereum did its token sale, the foundation sort of officially awarded like development contracts to a couple different companies that the co-founders of Ethereum had set up, et cetera. And also, Consensus was born around the same time, not taking quite that function on from the Ethereum Foundation, but aiming at commercializing the technology. And so we were one of the groups that came and joined Consensus a few months into Consensus's existence, something like that. And I think we're also the first to spin out. So early Consensus, and Joe, feel free to jump in at any point, had sort of a venture studio model where it would kind of develop and incubate projects to the point of viability and let some of them free. And so I think we were the first to leave in 2016 and raise external capital and so on, and have been at it since still.
Joe, any need to add anything to that?
That pretty much covers it.
Okay. All right. Thanks. Well, let's move forward in time to where we are now. And Joe, I was reading about MetaMask and 100 million monthly users, which is really incredible. And
annually.
Annually. Oh, okay. Sorry. Well,
Still incredible.
Still incredible, but obviously got some bad data there. Should have checked it more than once. That's on me. But still incredible, and really, more and more kind of like the Web3 gateway. But as somebody who, let's see, I have 1, 2, 3, 4, 5 MetaMask wallets. Obviously, was playing with them today, but just think, and many other wallets, of course. But thinking about wallets in general, and just as we're talking about, the growth of tokenization and DeFi and TradFi drawing closer together. How do you see the wallet experience evolving? Is it going to stay the same? Going to be dramatically different? How do you think about that?
Yeah. So MetaMask started life as a digital authority tool. It was a way to browse to some sort of application on the Ethereum blockchain, and essentially, if you wanted to do something in that application, you could click on a button and it would talk to your MetaMask effectively and enable you to sign a transaction that caused something to happen in the blockchain. So you're basically sending a cryptographically signed message in the form of a transaction, which would do something against a protocol. It evolved beyond that to be more of a wallet, where you're holding your digital assets, and then a portfolio where you're managing your digital assets. And it is now a pretty fully featured and getting even more fully featured new kind of neobank. It's a new kind because unlike a traditional fintech sort of neobank where they own the infrastructure, they control the infrastructure, essentially. We publish MetaMask, but you download it and you're fully in control of your own neobank. It's free to use forever, but we do have some value-added services like swapping that we do charge for. You can do things directly against a protocol, or we can make it easier and far safer and provide more opportunities to unify your approach in the MetaMask context. So we offer prediction markets and perps and swapping and bridging and deep security focus. It's been our major focus for a long time. We have a reward system that is ramping up where because we have perhaps the best distribution in the Ethereum ecosystem, we can enable different protocols to provide rewards. We can provide rewards ourselves. We can enable different protocols to provide rewards. And we can disseminate those to our users for doing different kinds of activities. We have a stablecoin MUSD, we have a debit card, and we're looking to weave all of that into a synergistic experience. As to where we're going in the world and where MetaMask is going, we are becoming hybrid with our machine intelligence offspring, and so with intent-centric architectures, we're increasingly going to be talking to our tools like our wallets. We'll express our interests, our goals, and machine intelligence will be able to explain to us how to use this DeFi protocol that we just encountered, or how much strato tokenized precious metals we should have in our portfolio, and how to rebalance things potentially. And so we're definitely going to move into a world where either inside your MetaMask or adjacent to your MetaMask, but having safely monitored guardrail capabilities inside your MetaMask, or even in its own MetaMask, your digital twin will be able to understand your needs and act on your behalf.
Okay, that's really interesting. And I mean, the reason I was asking is actually I'm going to say something that Kieran's then going to start laughing because it's going to peg me as being old. But just the other day, I remembered that I still have an active Fidelity money market account, which I remember when I got it, which like I had gotten it because I had left a job and had a bunch of money in a 401k, which I rolled into that Fidelity account and then started using it for paying bills. And I remember like at the time, like I thought it was amazing, thought it was fantastic. And like looking at it the other day, I could not believe like how primitive, like how basic it was with still the same functionality that I had been using, quite some time ago. So that's why I asked, because I think about that.
So
I think about
Fidelity is one of those new bleeding edge crypto companies.
well,
I am definitely aware of activities that Fidelity is engaging in, and many other FIs, because they've recognized that they need to be online nearly 24/7, 365, because of the president sends out a very aggressive, Trumpian tweet at 2:30 in the morning on a Sunday saying that he's going to do something. You might want to put on a hedge or move your digital assets around. So all these financial institutions are in the process of being given permission and almost obligation, forcing function to take up the technology. Hyperliquid and Polymarket and other prediction markets and perp dexes are are also a forcing function that are driving these organizations to either set up their own settlement layers in the form of Besu or Linea, or provide elements of user interface, components of wallets to their users, either institutional or retail. And so, yes, it may look like your grandpa's Fidelity account, but they're moving pretty fast. And so you're going to see a world in which markets are going to be consolidated so that you will be able to trade equities and bonds and other kinds of instruments, all tokenized, and you won't really need differentiated markets for the different formats going forward. Those will still be there, but you're going to be able to have a sort of bearer version of, let's say, the Russell 1000. DTC is working with a bunch of companies on that currently. There should be some news about Ethereum companies at some point soon. And you're going to be able to treat them as composable assets in DeFi. So it's moving fast.
Well, I look forward to it because it definitely has not hit my money market account yet. But I know you're right that they're working on it. But and actually, I want to keep talking about TradFi and what's going on there. But I don't want to completely get away from MetaMask. Kieran, I'm going to go back to you just because it's interesting how MetaMask integrates with Strato and the credit card and things. Maybe you can tell us more about.
Yeah, so we are big MetaMask users. It is my default wallet. We actually have an embedded wallet, Strato wallet for kind of a different class of user. But we find, especially in the run-up to our sale, when we get organic deposits, they tend to come from MetaMask users. And it's I've had it installed for years of many different accounts. It's clear that it's really grown into a quite comprehensive suite over time. I remember in maybe 2014, early 2015, meeting up with Aaron Davis in Berkeley, my Berkeley apartment at that time, and seeing the precursors. He got us some feedback from us on the UX and all that sort of thing, and it got huge. It definitely won the default and the distribution battle but kind of before MetaMask, there was not sort of a practically usable non-exchange or centralized or hosted wallet, right? It was the first that was much more usable than just having like a private key on your hard drive that you connected to everything with while running a full client. But also, not handing the keys all over to a Coinbase. Not that there's anything wrong with Coinbase, but it's a big kind of honeypot situation.
Really, I can't believe you just said not that there's anything wrong with Coinbase.
There's anything wrong with Coinbase.
Okay.
Centralized exchanges have their benefits, and ideally, they will give way over time to decentralized.
Yeah, and of course they made a arguably copycat browser wallets too, the Coinbase wallet. They're all the exchanges are kind of working both sides of things at this point. But one of the things that's really exciting about it. So one of our focuses for this year is living more and more of our financial lives on chain. And it's kind of a package of, it can be a little bit challenging. A few years ago, it was very difficult to completely live on chain. There are bills due that have to more or less move through the legacy system. Everything is denominated in dollars. So if you're living in ETH, hopefully you kind of have to have a lot of it, and you don't really want to sell it, to manage what's been a spectacular asset, but it's volatile at times. So one of the things we've implemented is we use the MetaMask card basically. So let's say you've tokenized gold, silver. You can also borrow against ETH in our system. You can draw down, borrow power, and then send the stables to top up your MetaMask account. Once you've done so, you can actually spend them at point of sale right now. So we had all hoped that there was a time where you would see at point of sale, people would say, hey, we take Bitcoin, et cetera. But it hasn't really scaled that much. It's more crypto assets have stayed, kind of internet native, if you will. But stables have been increasingly accepted developing world point of sale, but it doesn't even matter anymore because the card handles it for you, basically, right? So you send stables to some bank somewhere, I believe. The bank advances the cash and they settle in the back end, and the merchant doesn't even need to know that you did everything with crypto, which is remarkable, right? So that is one of the big, other than just access to our system via MetaMask, that's one of the big unlocks that we're tapping into. And over time we'll do more and more with the suite of embedded products and so on.
All right, thanks for that, Kieran, and it is exciting. So Joe, the title of this week's AMA, Tokenizing Everything, really comes from something that you've been talking about recently at Consensus Miami and other places where you're talking about the global economy. It's really on the brink of being fully tokenized, and talking about moving past stable coins to government bonds, treasuries, and also, as you've been talking about on this call, how it's going to impact traditional markets. But when you say like tokenizing everything, which I want to do, there's all kinds of things that Kieran and I talk about, our desire to have tokenized, particularly real estate. But I mean, when you say tokenizing everything, what is there a barrier to that? Like what's sort of the final frontier? And what do you think the hardest things to, what do you think the most difficult asset classes to tokenize are going to be?
So the easiest ones are the native tokens, utility tokens, protocol tokens, Bitcoin, Ether, DeFi protocol tokens, Strato, et cetera. So those are intrinsic to the operation of a protocol, and they're just necessary and native to the technology. You can think of the evolution of the economy as a whole bunch of disparate things that you could barter against one another. And then you develop a currency that can essentially facilitate the exchange of economic value. And so you don't have to carry around a barrel of oil and trade it for a whole cow. You can fractionalize your economic activity. Eventually, you start to standardize things. So you create commodities exchanges with different grades of commodities. And standardization takes us pretty far forward. Eventually, technology emerges so that you can digitalize lots of things, or digitize lots of things, and combination of standardization and digitization enables markets to get much more fluid. In the physical world, you can containerize things so that you can essentially have this single container format, or different size container formats for different kinds of vehicles, and you can move things around the world that way in a more uniformized way. So tokenization is taking digitization to essentially the next level, where if you can take these native tokens and then marry them with digital twins or representations of other kinds of instruments, either financial instruments that are sort of more centralized and sitting in their own siloed databases, but suddenly you can containerize them and then move them around the world on these global blockchain networks. Or you can represent that a house or a car is actually controllable from, or ownable, or leasable from this non-fungible token that represents the ability to enter into the vehicle, the ability to drive the vehicle. Maybe you don't have access to the glove compartment or the trunk or something like that because the owner didn't flip that bit or something like that.
Mm-hmm.
But essentially, we're moving into a world where everything can be represented on chain, can be financialized, can be borrowed against, can be composed into DeFi, whether it's a box of bananas or a car or a tokenized US dollar or tokenized Apple stock or Ether. And so we're moving into this granular world where everything can fluidly trade against everything.
Very exciting. Very exciting. Looking forward to that. And, Kieran, from the tokenization standpoint, for, Strato, big thing for us so far has been gold and silver. And I know we've talked about it before, but, maybe again, just talk about, why was it gold and silver and, what does that mean for us?
Yeah. Gold and silver, we actually came about organically, cognizant of time here. We had a sort of NFT era in which we tokenized many different things, along the lines of what Joe said. Was a diversity from carbon offsets to whiskey barrels to collectibles to what have you. And we found that actually precious metals were kind of where the strongest demand was. And the reason, of course, is just that it's a well understood kind of inflation resistant asset class. It's the old money, and we've created the new money. But the old money has come out of favor really because digital dollars have supplanted the old money. We suspended convertibility to dollars in the 70s, maybe arguably before, in terms of the one-to-one backing in the United States. And so the behavior still is that crypto is viewed as like a risk-on technology. Precious metals being more counter-cyclical. Most of the time, when the world's shaky, stock market goes down. Now crypto goes down. They're very correlated. Didn't used to be like that. Similar set of buyers, and precious metals go up, right? So it is typically the case that the average home in the United States costs about 100 ounces of gold. That is currently the case. And so it's a great perennial asset class that humans have valued for a long time. It's got pretty strong fungibility, in silver's case, industrial use and so on. And yet it's become inconvenient, hard to use at point of sale, hard to leverage. It's just out of people's minds as an asset class. But we're seeing central banks rotate out of the dollar into gold in particular, and some silver as well. And so I think we'll see a resurgence in gold and silver as money. And of course, the right way to do it, to Joe's point, is to make it tokenized. It's so inconvenient in physical form. Hard to exit, you got to assay it if you're looking at the physical, assess the purity, et cetera. The tokenized form has nearly all of the benefits of the physical with close to none of the downsides, and is far more liquid transferable. You can sell it, you can borrow against it quickly. Right now, there are a few $1 billion of gold tokenized against 30 trillion of above ground gold. We expect it to get in the trillions in a reasonable amount of time, right? ETFs are about $1 trillion, and we think tokenized gold is quite a bit better than ETFs from a access, usage, direct ownership, transferability perspective. So it's going to be big.
It's going to be big. And also just one other thing on that, and give you an opportunity to also talk another consensus related issue, consensus diligence, and how that's related to Strato and also to the metals that we tokenize.
I'll go really fast here. So
really fast.
With the folks at Consensus Diligence to do an audit, they've developed an AI-powered engine to do both a big initial scan and a continuous audit thereafter. We also did a kind of more traditional humans reviewing code audit with Consensus Diligence. Maybe in the show notes, we can throw some of the links to the media on that, but a very positive experience working with those folks to just make sure everything is solid going into.
Yeah, I was talking to the team in our regular town hall, the consensus diligence team, and they've built a system. So security has to happen across the ecosystem now, and that's increasingly possible with machine intelligence. So they've built an agent-based system that can look at different issues from many different angles. For Strato, they identified 30 actual issues, somewhere around there, but they had 400 and something different signals and enabled them to triangulate on these 30 actual things that they could prioritize and knock down as potential vulnerabilities. And so security is increasingly an ecosystem issue and an ecosystem opportunity. And I'm actually really bullish on the use of machine intelligence across our ecosystem to make it a golden age for software. I think the builders are going to have a huge advantage working with machine intelligence to clean up software going forward.
Okay, thanks. So I am cognizant of time and just want to wrap up. And Joe, just going to give you the last word. I just have one last question, something we've touched on, TradFi, DeFi, does DeFi swallow TradFi, TradFi swallow DeFi? Do they both continue to exist? What do you think there?
So decentralized trust is going to enable us to remake the world and turn it into a much more user-centric web and an economy that empowers the user through artificial intelligence and provides the user, the citizen, with economic, social, political, financial agency. So I'm incredibly excited to welcome TradFi onto our rails. The more of the traditional economy we can move on to decentralized rails, the better. And so I think it's going to be a more equitable world. I think we're moving past scarcity, post-scarcity. The world of abundance will be driven by AI and decentralized protocols with humans right in the center of that.
All right. Well, I think that those are good notes to end on. A world of abundance and a more equitable world. So I want to thank you both. Karen, as always, thank you. Joe, thanks so much for being here.
Thanks,
and this wraps up another Strato AMA. Thanks.
Thank you, Jeff.
Bye.